Welcome, and I'm joined here by Paul. We're in beautiful Istanbul. So, Paul, we get together here once a year here.
Yeah.
This is a beautiful day, beautiful backdrop. We've already had a fairly busy couple of days. Well, I have. I know you just joined this afternoon. You've already been on stage. So maybe if we just start with a couple of minute background, because you've had quite an interesting background with big corporates, with small business, with investing, and just what you're working on now, and then we can kind of get into the investing piece. So.
Yeah, okay. I guess the longest part of my sort of working life has been in the telecom sector, firstly. So that's kind of like key. And, to be very blunt about it, the telecommunications sector isn't really a sector for small players. So you have to be part of big players or complementing big players or serving big players. So I happen to be, lucky enough to have led startups, meaning new entrant is the correct terminology for telecom operators, that you're a new entrant operator. Yes, you have a license. Yes, you're a big boy, you have a lot of money, but it is in the end a form of a startup challenging incumbents who are well established, have networks, etc.
Yeah.
I've also had an interesting experience in fact managing or transforming an incumbent. So I ran Telecom, which is an incumbent fixed operator that had a weaker mobile, meaning a third operator, which was in fact the merge of the third and the fourth. And that also put me more in a transformational type person. And in that position, I also drove IT company acquisitions. So I drove 4 key acquisitions, which I believed were essential, which have proven to be the case, in fact. And then I was lucky or unlucky enough to be invited to go back into the company at the point of a loan default, which is yet another level of transformation. And obviously, I then felt I needed to drive those acquisitions further. So we strengthened the corporate venture capital part of the company. In between the two, I did full-time venture capital type investments, but I also invested in an energy startup. So basically you can call it like an energy venture. And I also invested in asset management and debt collection type, which was affiliated to my earlier activity, but mostly you could say 10 startups, around 10 early stage technology, and then energy now, renewable energy. I now recently expanded into more biogas fertilizer, and now I'm looking also at geothermal and mining. So I've kind of like moved a little bit into this field, and I've kept still a bit of activity in the technology part, because obviously my heart's there and my energy have gone into that. So in general, I've been a challenger, I've been a defender of like an incumbent, but more transformational type. Yeah.
Cool. So I want to come back to the energy stuff that you're into now, but just for people that don't know, how big was Turk Telecom? How long were you leading it?
So Turk Telecom, the privatization was 2005. I led it for the first 5 years of privatization, during which the fixed operator needed, in fact, to acquire a controlling stake in the mobile, firstly. So we had an arrangement with Telecom Italia, who were partners with us in my company, in which I was the CEO, OJ Telecom. So basically, through that affiliation, we were able then to make an acquisition. We acquired the mobile operator controlling stake. When I returned to the company then had managed to acquire it 100%. So the mobile was initially owned 41%. I went up to 81%. When I left, the company was able to go up to 100%. So these are kind of like the stages of the mobile part. The fixed part, largest fixed operator. So the total number of subs is in like 43, 44 million customers, mixed of fixed and mobile, broadband, and so on. So that's kind of like the size of it. Yeah.
Not
So
small.
it's not small, no, not small. And the number of employees, when I came in with 55,000 employees, was just in the fixed line part.
Yeah.
And when I left, plus the mobile, and the call center business built up was around 34,000 employees.
Mhm.
Number of lines, 43, 44 million.
So, I mean, you've had it's very interesting from an investor standpoint because you really have played on almost all the different sides of things. I guess what would be interesting is what are some of the lessons that you've learnt as you've kind of gone through that? Maybe ideas that seem to make sense earlier in your career that didn't make as much sense later in your career. What are some of the key learnings you've had?
I think, that, I actually established my first company, you could say roughly when I was in my mid-30s, just before I became the CEO of this telecom company.
Right.
So I had come from more the management consulting type background, but I was taking risk in that role. We were taking project development risk.
Yep.
Now, normally consultants should not really be giving away what they do for value because it's dangerous. They can easily just take it away from you. So I was already, willing to take risk, and I knew that without risk you can't get things done. I wasn't really motivated in the risk taking in terms of personal benefit or trying to earn more money for myself, because how much more can you earn? You may earn more by just being a CEO of a company, for example, instead of running your own consulting business, right? Yeah. And then I ended up having to be the CEO of my client's company, so that put me in that. So, I think obviously it's difficult to give like general advice or something from my experience to like a broad, let me say, category of people. But I would say, if you're working in a large company, in any position, whether you are the top person or second or whatever, at any tier level that you're in, you need to give something to get what you believe done. You have to give something up. And I think most people who work in companies always say, like, give me this so I can do the following. Like, give me money, give me, etc. And I think you need to give something back. And I think that was kind of like, let me say, my formula. So I was willing to give up income, bonus, in order to push them in the direction of trying what I'm saying to get done, regardless of the position.
Which is a very kind of entrepreneurial approach anyway. I mean, that's what.
So in companies, I use that with the people working with me.
Right.
So what I did is I did not run companies.
It's not a typical employee mindset.
Yeah. So what you try to do is you try to find out. You say, I want these 5 things done. So I'm, let's say, the leader of the company, and I want these 5 things, but we need to do 100 things. So what are these 100 things? So one of the things I did when I came back to the company, for example, I was gathering them in groups of 20, and each one had 5 minutes, one-way conversation. They talk, we listen. Yep. And they can say anything. They can say, we shouldn't do this. That's good. Let's stop that. That's very good. Stopping something that's not working, if we can't do what should be working, is a good enough first step. Other people came up with ideas. From that, we had a list. I probably spoke to around a number in the range of 600, I guess, maybe. We're targeting about 1,000, but we went up just over 600. From that, we had a list of 100 projects, 5 of which really were the ones that I wanted to drive. All the others were good ideas from the others. And then we had a project management team saying, okay, so you guys manage these activities. So we turned into an execution workforce. The execution workforce is managed by projects, not hierarchical. So everything is a matrix. Doesn't matter who your direct boss is. Ultimately, we all work for the same company. I'm the employee number 1. I'm also an employee. If I don't do my job, I should be fired. So it turns into execution.
So let's just pick on that for a moment, because one of the things I was touching on with our mutual friend Fadi is that the barriers to entry for investors are now much lower than they used to be to get into companies. And so many of the investors watching will be employees in companies. They don't necessarily want to be entrepreneurs. They're just looking to get the best possible returns. And oftentimes, because they don't have the exposure to the deals that you would receive, a lot of the deals that they do are what I call hope deals. There's a great potential, there's a possibility it's the next Uber or how do you evaluate opportunities that come to you in terms of kind of giving you the best odds of returns?
Look, I mean, okay, the way I do it is that I tend to decouple myself completely from, let me say, the successes of the time, because it's very dangerous to allow yourself to be influenced by the most recent big noise in the market, like Uber is going to be something great or some other silly nonsense like that, because a lot of these stories tend to be hyped up in reality. Some of them are really good stories, but very few really are actually in reality.
Yeah.
The second thing is that we notice, especially with SoftBank, for example, or SoftVision or whatever they call themselves nowadays, is that there's a lot of money out there.
Yep.
And when with excess money coming from institutional types of this kind, and you are working in a company and you'd like to be part of all of this, I think one of the most important decisions you should be making is, for example, that you should not be part of it. That can be an important decision for you to make. If you are very passionate about something that you really, really believe in and you think you have some value add, probably keeping your job and contributing a bit of your money, but you really believe in it, but keep your job so that you keep your stable income coming through.
Yeah.
And if you then want to be part of execution of that dream that really is inside you, then somebody should pay you to do that. So you shouldn't be giving your money and your time. And I think as a general advice, I'd say give it a shot. Obviously, if you're young, maybe you have more to play with. But I think what we're seeing now in the world in this period, that people are living longer, and that is creating a new opportunity in two respects. One is that you can take your risks later in life. It's not too late. Just wait for the right moment. So don't feel, if you're 35 or 40,
you're going to miss out on
you're not going to miss out.
Another bus.
Exactly. If you're 35 or 40 and you have a 10-year-old child and it's going to stress out your husband or wife or something like that, then it's much better that you just let the next 10 years go, unless you see something that you really want to do.
Yeah.
And if you want to actually execute it, that's one risk.
So I think one thing you said there, which I don't hear enough of, but I think is really important, is you mentioned about saying no to opportunities.
Yeah.
And I think one of the biggest or most useful decisions that I made was saying that a whole area of investing was going to be off limits to me, and that was the startup space. And for me personally, it's because as an entrepreneur, I see the potential. I get excited.
Sure.
But to me, it was basically gambling. Like I knew what the likelihoods of success were, but because I didn't for years, I didn't have that off switch. I would waste so much time going through these deals and these opportunities, and it's the energy as well. And once I said no, I'm only going to work with companies that have already reached $1 million in profitability and above. It just that ability to kind of segment what you will look at and what you don't look at is very important. Let's just come back to...
Actually, it's worse than gambling. Just I'd make a comment on that. It's worse than gambling because what you're doing is you're giving your money to somebody else to gamble it away. So it's actually doubly distressing because you watch this other person, waste that money, and they feel you've given me the money and I know how to waste it more than you can, on the odd chance that it'll make it, and I really very much relate to what you just said.
No, very true. So let's come back to hopefully the not gambles that you're doing at the moment. So you mentioned, and we touched on this yesterday, you've moved into the energy sector. There's clearly some potential there. You also mentioned you're having a few frustrations there. First of all, what are the sort of the bigger trends that you're seeing in energy that kind of persuaded you to start looking at specific deals in that space?
I think the most important thing in investing is to be very, very opportunistic, meaning open to anything that looks good and consider it with an open mind. So don't try to say strategically, I need to be in, let's say, energy, or I need to be in XYZ. So this is like really, really key, I think, because you don't really know what is strategic. You can't know. No other human being on earth knows that. And it's better to be opportunistic, and that then relates to also what opportunities present to you. Because maybe opportunistically, if you had the opportunity to invest in renewable energy, for example, on terms that you can contribute to, you should definitely consider it. Now, why? Why is that? So I was interested in renewable energy, actually, frankly, around that 2010, 2011 time frame. The opportunity came when Turkey decided that it needed to incentivize people to invest in the sector. So they introduced a feed-in tariff.
Okay.
Now, the feed-in tariff was not that much above market price. This is not like the European model where, let's say, they wanted you to invest, for example, in, let's say, wind, and they offer you a 20x euro cent per kilowatt hour. Turkey did it at 7.3 after they increased it. So Turkey didn't go for the excessive incentives. What it did, it identified in wind, solar, geothermal is the one that I, got interested in, and then there's biomass and so on. So I was hearing about these things. Why did I pick up geothermal? I mean, I picked up geothermal literally the year they introduced the tariff. Was that within the money that I was willing to risk, I can make very big impacts.
Right.
And when I say impact, I'm not talking about a return on the money. I mean, I take a risk that perhaps bigger companies do not want to look at, this exploration drilling risk.
Okay.
So if you're looking at a solar or a wind project, what do? There's a licensing area. The government says, okay, in this area you can roll out a wind facility, and then people come and say, okay, so I'm willing to buy it for 50 million, 80, 70, okay, gone for 90. Okay, that's $90 million, $100 million. Within what I could invest, that's nothing. I can't contribute anything. But geothermal is different. You can take an exploration risk on something which is totally unproven.
Right.
That's my terrain. That's like buying into this gambler, where you're gambling into, someone that says, give me money because I'm a genius and I know how to spend it or gamble it away, you see. So I thought that as a great geologist, so there's knowledge, there's science in what we're calculating here. So give me what licenses do you have now that are unproven? So we started going through these patches of unproven licenses. So the proven ones were being tendered out. The largest, by the way, was that year sold for $550 million. You see?
This is in Turkey?
Turkey, yeah. Okay. So when I saw that people were willing to pay for something proven that much, so now the value of a proven license is now a market price. Yeah. Okay, now what if we can build up to something like that? How much do we need? And that's within my ability to risk. And I thought this is better than investing blindly into, for example, let me say a technology startup, which I was doing. So I was also doing that in any case. And I figured renewable energy is an absolute must for the world. Turkey's cost of importing oil and gas is so high. That's why they save so much in their current account deficit. So therefore, the country needs it. The incentives are there, you see. So you take a calculated risk. But it is a gamble. Yeah. So it paid off, luckily, and that's where we are. And then I expanded into other things in that field. So.
And then just, I guess, from a portfolio respect, so what you're looking at there, it's an asymmetric risk that can potentially give you very big returns. Yeah. You've been doing this long enough. You're not gambling or betting money that you can't afford to lose on that. How do you kind of split out? Do you sort of have an alternative assets bucket, which is your play money? So obviously, I mean, that's the most important part of, obviously, let's say what people call, portfolio management or whatever, whatever that term means, because obviously these are not exactly a portfolio. But so what you're doing now is that you're diversifying your risks. Now, obviously, I went up to 20, called them venture capital, half were pure startups. And I'm like you, generally I don't like startups, but these specific things that I believed in were started by people who worked with me. So we together said, we'll put the money, we started it up. So I'm not investing in someone that tells me, give me your money and I'm going to start something, because especially if they're young, you see, because nothing wrong with being young, but the point is that if you haven't experienced the pain of getting older and seeing so many failures in your life, you're over optimistic. Now, let me tell you one thing. I am a lot more optimistic than a 22-year-old. Otherwise, I wouldn't be taking the risks I'm taking, right? But the question is, do you have the skills required to be able to execute upon it? So the facts then become is that you diversify by having many investments and hopefully diversify into, if possible, more than one sector.
by going into, for example, energy for someone like me, I thought that this is something that I can see. If you make something work, you have in front of you like a 20-year life. Whereas if you make something work in technology, I don't think you can say anything beyond 5-7 years, let alone 20. Yeah. So then you mix your portfolio. So I say this is a dividend yielding portfolio. It will, if successful, will be paying back dividends and an equity value if you wish to sell it. But so this is a dividend stream for a long time. That's a good investment. So I now made 2 of those. The other one is in biogas.
What's your so just coming on to liquidity, because this is always an issue for me, and I personally like deals I can get in and out of, just from the opportunity cost of being locked up for long periods of time, and often with these bigger sort of infrastructure style projects. What sort of time horizons do you have when you're looking at those deals in terms
So actually, what is interesting is that if you develop an infrastructure like asset, that infrastructure funds are not capable of building by the limitations they have on the use of their funds, you can build up such assets to sell them, and they will be willing buyers. So don't underestimate that possibility. So the exit out of this is strategic buyer who is buying something
which could be a relatively short
which you couldn't have built. Let's say 5-7 year logical. It can be 5, a bit less than 5 is possible. Then you can go up to 7. Then you can go to stock market. If you go to stock market on a dividend yielding story, for example, Istanbul Stock Exchange, that works perfectly because the types of, for example, dividend yields are in the range of 5%, 6%. So you can go to market at 8-9, which is a very good multiple, in fact. And then you have a liquid asset, and the liquid asset at least is the market value, which all of your co-investors can then feel more comfortable. So it gives you more flexibility. Maybe with a VC technology type company, it could be harder to list it. So those go for exits. I also, by the way, because when you invest in people who are generally young and building up those companies, I'd like to know what they think. For example, if they like the company and they want to keep owning and running it as an option, I'm not against that, then they should ultimately lead towards a form of profit, paying out dividend and listing on a stock market. So then you don't get the best possible exit out of that. But so I'm not that hot on exits in the sense that I say I'm investing because we must sell this company in time, but every company must have an exit plan that's pre-agreed. And if we say we're building to sell and the CEO wants to do that, that's a very good formula.
So look, just I want to finally finish on impact, which is clearly the topic of the day this year, impact or ESG. Now you're investing in energy and renewables to as one of those. Is that a deliberate thing, or is that coincidence in terms of the best returns? How much does that play a part in your thinking? And do you think this is there's a lot of lip service being paid to this, but do you think this is a genuine shift in investing mindset?
So when I first looked at the geothermal sector in 2011, in this specific market, we knew that Turkey had very favorable geology. So that's why I said opportunistic. It's a very specific value here that you can drill, find, and then operate at a cost all in, let's say in terms of US dollar cents per kilowatt hour, at what price you're selling, and therefore, that's why you need some level of defined price. The reason, this is not, by the way, a subsidized price, meaning that it's a high price. What it is giving you a definitive price for 10 years that allows you to get a long tenor loan.
Predictable, yeah.
So therefore, your capex is then fundable. The part that you cannot borrow for is the drilling part, right? The risky part. Yeah. So the banks see if you take that risk and it pays off, then you get a bit more of that. It's easier to get it the second time, and they give you the loan to build it up, right? So this, what I saw about it is that, looked at the US numbers at that time. So US happens to have everything of these kinds. It has like rich in geothermal, the largest in the world.
Yep.
And then it has this, clean gas. And then you go to the kind of like known costs of wind and solar and so on.
Sure.
So what you could understand from all of this is that fossil or gas-fired plants need to be cleaned up. Gas is cleaner, obviously, but the question then is that to clean them up, there's a cost. So you could see that the world is moving away from conventional, and renewable was being pushed. So therefore it's cleaner, and therefore people, why are you moving all this energy around if you have where you are living, so you have some sun and some wind and some geothermal, in our case here, or something like that, then please use it. The same thing, by the way, is like what I liked about the biogas is also this particular project inspired me a lot, because this will be the largest. Now we're driving a fertilizer plant from it, and you're doing something good about it. So this part, when you look at impact, it's an economic impact. The country doesn't have to import this expensive energy, and on cleaning up, let me say, waste to energy is another form of efficient form of generating some form of energy. Or in this case, we're also doing fertilizers. I find that inspiring also, that you're doing something good, which is critical, I think, as you get older and you want to be part of something over time, like a dividend yielding company for 20 years. You want to know that this is doing something good, you see. So that also makes you feel good as you're earning from it. Yeah.
Very cool. Look, Paul, I could talk forever. It's great to catch up with you. Really appreciate your thoughts. I always learn a ton from you.
Sure.
So
same here.
Many thanks for your time.
And then you can.
I will let you get back to the conference.